Hey, how's it going, everybody? Welcome back to the portfolio. The portfolio is now at 82,000, down about 2.4% today. And man, the market is getting very choppy, man. Let's actually check out QQQ real quick. Let's check it out. Because I was looking, I'm like, we're getting pretty close to correction territory, man. Let's actually see. Because we peaked out early June 2nd at 746. Right now we're at 684, right? So in about almost 2 months, about a week and a half more will be about 2 months. We're at 8.28%, right? If we have another red day, another red day like today, we're basically gonna be at 10%, which is correction territory, man. And it's been about 2 months. Do I see the market continuing to go down? Well, yeah, man, I don't see a change in the market. We see the same things going on, the war that's going on. We see capex continuing to go up. We're seeing memory and chip stocks weakness continues. Maybe we have peaked out. That's what it seems, right? It's been a while. Like we're seeing the big movers the past 3 months peaking out. Since SanDisk June 25th, $2,300, and we're at 1,400. I mean, the beginning of this week we were at 1,300, right? We're almost down 50% from that peak at the lowest point this week. So, and then look at the market. Nebius down 14% today. Bloom Energy down 14%. SanDisk 10%. Iren 8%. SK Hynix 8%. Intel 8%. Even after they just did basically a triple B, but they're also announcing they're gonna get into more debt, or their capex is gonna increase. So that's exactly what they don't want. Want the market investors don't want that they don't want their capex to increase. They don't want any company's capex to increase. Obviously, as you see, all the big techs are not doing well. Almost every big tech other than Apple, since they're not getting into debt, they're the only ones that are doing decent. But then a lot of people think that Apple also could be in danger long term, because what if this AI race does eventually produce lots of money, and then guess what? Apple hasn't done anything, So there's just risk all around. I mean, everything's down. Oracle, Uber, American Express. I mean, American Express has nothing to do with anything, and it's down 4%. I think because of their earnings. Robinhood 6%, Micron 6% down. Micron $900, So we're also we're going back down. I mean, if we continue to go down, if we go under $800 next week, I mean, do you guys actually believe we hit the top already? Because now we might be going into a bear market now, because it's already been a month and a half of us slowly, gradually going down. Could this be like another 2022 where the market just continually went down for like about a year? We may see that, we may see that, because all these big techs, they are all increasing capex still, right? And they're not increasing capex by a lot like they used to. They're increasing it slowly, like less and less every quarter, which obviously may signal that they may be close to maxing out their capex, which is bad for these companies down here, right? All these chip related memory related stocks, but like they're still increasing it, which is not what investors want. So that's why we're seeing Amazon 230 instead of 280, right? We're seeing Microsoft at 380 instead of 500. We're seeing Meta right now at under 600, where it should be. I believe if it didn't spend any money on capex, or a lot less than capex, it would be an $800 stock. So all these companies are gonna, at least this quarter, increasing their capex. Obviously, Google was the first one, which most likely all the rest will follow. So at least, and then we're not gonna know for the next 3 to 4 months after the next earnings if they're gonna continue to increase their capex, which most likely they will. And if they do, they're pretty much maxed out, which basically means that all the companies like Micron, SanDisk, Nvidia, AMD, they're pretty much almost gonna be capping out soon, because they're not going to be growing as much if these companies are not putting a lot more money into it. But everyone's getting capped out right now, so this could be a big switch soon. So whenever I'm thinking year, in the next year, the next 3 quarters, we may see some of these companies maybe max out their capex and maybe stagnate their capex. Meaning, like, I don't think they're going to be increasing their capex anymore, probably after 1 year from now. So we may see 1 year of the market just stagnate or slowly, gradually go down, which is going to be like the same as 2022. That could be a possibility. That's something that I'm actually thinking might happen, you know? So, and if that does happen, the portfolio may have reached its peak. If that was a scenario that did happen, it may have reached its peak in terms of gains, right? Uh, which means this whole year would be just a year of continually increasing share counts in stocks that we like. Because, like I said, if this is like a 2022 repeat for the next couple months or even year, we may see a bunch of stocks just slowly, gradually continue to go down to new 52 weeks or new 52-week low. In which, I mean, obviously, the only way you can come out on top of that is if you guys are continually depositing more money into your portfolios, slowly averaging your cost basis down and just increasing your share count. Because we may see some companies like Meta, right? Meta, I think obviously the big winners in the end will be the big tech, the Mag 7s, right? Because once they do cut off their capex and actually decrease their capex, obviously they're going to skyrocket. But these companies that have been running for the past year are probably going to crash, which many of you guys can say that they're crashing right now, right? Because they're going down right now with the big tech still increasing their capex, right? So what's going to happen when they say we're not increasing our capex anymore, we're actually going to be cutting our capex? We may see some of these stocks crash 30%, you know, in one day instead of just 10%. And 10% drop is significant, you know, pretty significant. So that's why it's kind of scary with these companies. That's why I kind of think that we may be hitting peaks already, or we may already have hit a peak. Like, do you guys actually believe SanDisk is going to go up to what, 2,400, 2,500 in the next couple of months? What's going to be the catalyst for it to go up? Like, we already seen an insane amount of growth. Like, I think they're going to get the next few quarters will be insane, right? But even then, like, they're going to have to comp these numbers next year. And unless, I don't know, these companies, these Mag 7 companies, which these ones are the ones that are the big spenders, unless they can somehow increase their capex like 50% plus or more, I don't think these companies will go any more up than they already have, you know? At least that's my opinion. That's my thesis. Like, why would Micron go up even more? Like, if Micron was to go to 2,500, it should already be there, technically speaking, you know? Like, how much better can the numbers be next year, percentage-wise? Obviously, the number will be bigger, but percentage-wise, I don't think the growth will be there for next quarter. So, I don't know, man. Like, I think these companies may be, like, good swing plays, like, because the swings are crazy, right? Like, we may see 7% drop in Micron right now, and then next week we'll go up another 6%, and then the week after that is going to go down another 10%. And you see it's going to slowly get lower lows and lower highs. But I don't think that this company will go back up to 1,300 or wherever it was at, you know. But I may be wrong, right? I may be wrong. I don't know. That's just the way that I'm seeing it, logically speaking.